Good evening, traders. Welcome to the Sunday Open. I'm your host, Craig Shapiro, macro strategist here at NinjaTrader Live. It is the last day of May 31st, 2026, and we are here for you on this Sunday evening, just waiting for the tape to open here, and it's kind of quiet. Let's see.
Gold's getting smashed.
Yeah, gold's getting hit. I guess you have a little bit of the fact that we didn't come to a deal yet between the U.S. and Iran, and so we're trading a little bit of deal dynamics here to start the open. But kind of a quiet open for everybody. So, how's everybody doing on the Sunday evening? I have Sara checking in from Southwest Florida as always. Pharm in his new home, I think, in Arizona, and Pax from Chicago, fresh off another White Sox game. How's everybody doing this evening?
Great, they won again, swept the Tigers. Detroit sucks.
Yeah.
Fair.
Yeah, we did close on the new house, but haven't moved it yet. Hopefully next Sunday we'll be in the new office if I get my act together.
Congratulations, Cal.
Yeah, saw some pictures of some air mattresses on the floor there. So congratulations to you on that. It sounds awesome. Well, quiet open here. My Ninja quotes are not really coming through here, but I'll get to work on that anyway. But it's basically a kind of a flattish open. Russell down 6 basis points. S&P kind of not, really not. We're not really doing much. Nasdaq up 14 handles, a little over 30,419.50. Bonds a touch softer. Gold getting hit, as Pax mentioned. Oil up back over 88.88, up 165 basis points. So I guess the fact that we haven't necessarily come to a deal here in Iran is, the early action on Sunday evening here, but quiet for the first time in quite some time. I think the S&P now is up 9 weeks in a row since that reversal on March 31st. So it's been quite a historic ride, quite a historic move for the Nasdaq and semis, and we will get into all of it here. So let me flip over to Sara, who's back. I think you said you were out last week, but how are you thinking about the setup to start the new month, in the month of June?
Kind of just where we are right now, still sitting up at the highs, more of a day trading type environment. And I kept saying, we can't possibly go down until we take out a previous week's low, which we did last. Wait a minute. I'm a week off. We did 2 weeks ago, but again, when I'm always talking about the line in the sand. So this would have been an opportunity to short, but that was the line in the sand. If you cannot stay below it, you've got to be bullish. So still, this is just a very bullish market environment. We are going to keep playing bullish. You did mention, Craig, that today is the last trading day of the month. So tomorrow on Monday, which I love when that happens, we get a new month on a Monday. It keeps everything nice and easy. We do have a new month. So if they want to try and turn things around, it would happen on a new monthly candle open. I'm just not so sure that, they're going to be able to do that. So we will just, take it day by day. As long as we're above last week's lows, we are not going down, point blank period. And we will just kind of, what we've been doing, it's more intraday trading, smaller time frame trading, using like the 15-minute, 30-minute, 60-minute, kind of playing the bottom of broadening formations and riding it back up. That's been doing well for weeks. So we'll just kind of continue doing that, taking it day by day. And then, we look for opportunities other places too, with things that are really moving. But still, very bullish market, not going down if we're not below last week's lows. So again, if nothing else, keep you out of a short, keep you out of trouble. You don't need to catch the top. That's for sure. And yeah.
Yeah. It's historic, right? I think we talked about this. We're off last week for Memorial Day. We talked about it the week before, just this idea that think we were all kind of looking for a top, but we're trading, trying to trade from the long side, and there's really no reason to get negative until it's reason to get negative. And so I think you had mentioned just, it's needing to see daily closes below prior day, weekly closes below prior week. Is there any indication as you reopen the charts here for this week that we are on the precipice of anything like that, or really all systems go?
No, not at all. I mean, it looks like, did the futures just start a new monthly candle? It looks like they just did.
Mm-hmm. Yeah, they do.
Okay. Okay, so yeah, so this is the new monthly candle starting now, tonight's session. And we're nowhere near last month's lows. This is a monthly candle. This is last month lows down there at 7,200. We're nowhere near like going down there. So if they are, and kind of like what I said with a new monthly candle, see how they're trying to start it off as red. This is going to be their only time to their only opportunity in the beginning of the month to kind of, change the course of direction from big bright green candles in, what is this month, May, to possibly a red monthly candle in June. This is what we call the flip. So they can try, but we're going to have to really see something significant, and something significant's really going to have to happen for, I feel like, the bears to get any kind of traction at all. Until then, everybody's just been buying this dip. And again, without being below last week's lows, we're not taking out previous month's lows. It's just impossible.
Right. Any differences, divergences between the four major indices you're watching? There has been some element, like on a daily or intraday basis, when the tech trade is good, the Dow trade is bad, and then vice versa. But as I'm looking at these four charts, it doesn't really seem like there's much divergence there. But are you seeing anything?
No.
Yeah.
No, they're all sitting up at the highs inside last week's range, and they're all red at the moment. So they're all very correlated, which typically will change. Usually it's RTY and YM that are correlated, and then ES and NQ. But yeah, like you said, you'll see tech will be rallying and RTY is shit in the bed, or, kind of vice versa. So there's a little intraday stuff like that, but nothing on these higher time frames is showing any kind of divergence like that.
Yeah. And I know some of you in chat are noticing that there's a little bit of an incident issue with the NQ and ES, and we have a team looking into it. So just a quick look here. NASDAQ now down 30 handles to 33.75. The S&P similarly down, 12 basis points, down 9 handles to 75.86. The Russell, everything's kind of down. Russell down 22 basis points to 29.17. So we are looking into some of the code issues on the Ninja platform, but it is a quiet open here. Crude is up 2.9%, gold down 90 basis points. So again, a little bit of that flavor of where's the deal, and are we going to have a resumption of missiles flying in the Middle East? There had been an attack on the U.S. base in Kuwait over the weekend, and seems like some ships are being monitored or possibly boarded. And so a lot of that back and forth headlines. So we'll see. We'll keep an eye on it as the night and then days progress through the week. But Pax, turning it over to you, how are you thinking about the setup here for the first week of June? What's the how I'm curious kind of how you've been seeing, and how have you been seeing it lately, last week, just the trading dynamics of this, keep moving to all-time highs, but 1 foot on the exit type mentality.
I've been tracking open interest. I pay attention to open interest a great deal. And, the idea is that in major rallies like this, open interest grows not necessarily exponentially, but grows. And open interest isn't really moved in the S&P since we got above 7,300. It's been basically the same. So this is a dreaded, what I used to think of as a dreaded, what I used to call in the NASDAQ pit, the dreaded creeping rallies. And I don't mind dreaded creeping rallies when things make sense, kind of in a capital flow sense. But things don't make sense to me, and Anthony and I were talking about this last week, is, maybe things have changed, I put out a tweet. I meant it half tongue in cheek, but I think that people thought I was very serious last week about asking if this is MMT, modern monetary theory. So, you have the bonds still relatively weak, and it doesn't look like the Fed is going to be getting into their cut soon. Maybe not a hike until December. But so we stand pat and don't do anything, and maybe that'll be an idea, sort of a synthetic sort of a cut. Crude is still $90. It's not, that doesn't bode well for inflation. Gold, gold absolutely gold is a great trade right now. Crazy, but a great back and forth trade. And so the indices just hang in there, and then we trade these 200-point swings in the S&P that I've been talking about with 100-point ladder rungs, 72 even, target 74, target 76 with stops in between. So we stopped at 76.08, which is at 202-point ladder rung last week. We made a high of 11, came back down through it. It's not enough to make me want to sell anything. Every time I get short, I end up getting stopped out. I take a little bit off the table like I do on Friday, right? I pay for my trade, take some profit, and then a tape bomb comes and stops us out. Hey, I get long. I get a good opening range trade, or I get a good rotation trade, or I get a good late day trade. And I pay for that. I take profit on it. I'll sit with it, take it home, and I get stopped out for scratching the rest. My stops are always at entry, so I get stopped. I get scratched out again. And I see what you wrote, Tony. I see what you wrote. I'm coming for you. But, it gets stopped out, and it gets aggravating. Unless you're like a buy and hold trader where you're just, and that's not how I trade. It's how I invest, but not trade. And you're not going to trade stops. You just buy them and hold them. It's very difficult to get anything more than a short-term swing. 15 handles, 30 handles, that kind of thing. This is not easy trading. We've had. Certainly I've had long periods in my career where it's not easy trading, but I don't think I've ever had this sort of a disconnected market in my life. I traded through the tech bubble in '99, and the tech revolution. And if you guys, probably most of you are too young to remember, and some of you aren't though. It seemed like those tech stocks were always, money was pouring into them, and they were never going to go lower. The S&P rallied from 1,500 to 4882 in a year. Then one went from 4882 to 785 in 2 years. So are we looking at something like that? I think so. I think eventually, but not yet. So I think that the S&P is going to trade up to 8,000. I tweeted that out a month ago when we got above 7,200. It's going to go to 8,000. I don't know. Will I be long? I don't know. I mean, it doesn't seem to be, this is something Anthony and I talked about last week. It doesn't seem to be, at this stage of my career, it's not worth the energy, at this stage of my life, right? It's not worth the energy. But for those of you who are still younger and you're building, take your time, look for those trades, take that short money, pay yourself, and look for the next setup, and you'll be okay. You let those short-term swings, those intraday swings, you let those swings build up your bankroll, and that ends up funding those trades that will change your life down the road. But you have to manage your capital right. You have to live the correct way, and you have to do all of those right things that we talk about doing over and over and over again. Anthony's right. You can't make a joke on X without people going too crazy. I mean, it just drives me nuts.
Yeah, look, I mean, I think it's just a reminder to us that again, we talk about this on the morning shows, just that there are different pools of capital with different mandates. And, many of them are just trading, volatility, there are option selling strategies, there's plenty of structured product flows. And what we have right now is we have tremendous call buying in the single names, really across the board, across all of big tech, across all of semis. And so call premiums are very elevated. Call skew is nearly at the 100th percentile of observations over the last several years. And while put skew is basically down the floor. So people, it's the fear of missing out. I know you call it the joy of missing out, Pax, but there is definitely a fear of missing out in this rally and some catch up that's being done here. And you're seeing that being evinced in the options markets, with call premiums kind of exploding higher here. And look, you've had these massive moves, right? You had last week this 30-40% moves in old stalwarts like Dell and IBM and anything that the president talks about. But you're definitely seeing that dynamic in play there. And really, from a swing or trade investing perspective, the cost to protect portfolios now is really about as cheap as it can be. So in light of the dynamics in play, if you're concerned about any of the bigger risks out there, whether the economy is going to slow due to elevated energy or elevated interest rates, or you're concerned about a bubble, you have the ability now to actually protect your portfolios in a reasonable way. And so, yes, you'll potentially throw away some returns if we continue to move higher and blow through 8,000 on our way to 10,000. But it's about never losing your seat. So having some protection here could make some interesting sense for sure.
That's a great point, and a point worth building on real quick is, to maintain your seat, right? And something that we would talk about on the floor because we all had seats, but to maintain your position here, not a long position or a short position, but maintain your position as a trader. That means that quite often there are going to be stretches and periods of your career, all of you, where you're not going to be making money. You don't have to necessarily be losing money, but it's just things, you don't see it. It's not clear to you. Things aren't lining up. And so you wait, and if you wait, when the markets do loosen up and things do start to make more sense, you are not putting good money after bad. You're putting good money on top of better money. And that's the name of this business. So you've got weeks, maybe, a week, a few days during the week where you take some expenses, you take a step back, you get a week, 2 weeks of nothingness, and then boom, you catch a breakout to the upside, you catch a breakout to the downside, and the macro stuff starts to line up again. That means, my brothers and sisters, that you are traders and going to be putting yourself in a position to be a long-term profitable one. Don't try to catch every wiggle. Don't try to be part of every move, and do not you don't have to. There's always going to be another bus.
Yep. Well, again, just another quick look at the tape here. As we mentioned, we know we're operating with some of these data issues from Ninja. We're on top of it, just to give people a perspective. You're not really missing much because the S&P is basically flat at 75.95. The Nasdaq down a touch. Russell down 7 basis points. Big mover remains crude up 2.7%. The back end of crude also moving higher, so a little bit of that geopolitical dynamics in play here. Gold down 65 basis points. Bonds are a touch weaker, really nothing to write home about. So a pretty quiet Sunday open here, not unexpected as we kind of head into the first of the month. Plenty of data coming this week. ISM tomorrow, big jobs report week. JOLTS on Tuesday, ADP Wednesday, claims on Thursday, and NFP on Friday. A lot of Fed speak this week. We're not going to hear from the new chair, Kevin Warsh, until the Fed meeting, which is on June 17th. So we got a little bit of time to go there. Also dealing with the SpaceX IPO is coming potentially as early as next week, which will be very interesting. Something I'm sure we'll talk about a lot on the morning show, and just the dynamics in play there with respect to the indices too, because they're changing the rules and they're going to allow passive money to get into the SpaceX IPO within 5 days of it being listed. And so pretty interesting dynamic change from how IPOs typically work. And then I'll have some implications for the rotation trades, right? We've seen a lot of money in the semis. Well, if money needs to go now into SpaceX, it's $1.5 trillion to $2 trillion company. The money's going to come out of somewhere. And so it'll be an interesting dynamic for sure. But let's kick it over to Pharm. Pharm, how are you thinking about the setup here for the new week, the new month? And just how are you thinking about just this idea of, again, trading from the long side, but an eye on the exit?
Yeah, I'm going to completely mix it up this week and start with NQ first instead of ES. So like mind's blown. Yeah, I mean, it has been up only, this situation. And it is what it is. And again, I've mentioned a few times, I've really doubled down on treating this as a video game. If you're a day trader, it's a little bit different if you're talking about investing. I mean, I don't really think this is a good time to be allocating new capital to broad index exposure. There's plenty of names that aren't necessarily on the moon that could perform. And I'm happy to pick off some of those. But yeah, for me, like really both Sara and Pac said, we're just trading this short term right now. And the upside is the direction to trade until something meaningful changes. And, as I've said for a number of weeks, right, it's really going to require not only taking out a prior week's low, like we did a couple of weeks ago, but really breaking a multi-week balance to the downside. So what happened 2 weeks ago? We weren't here last Sunday, right? We came down. Both Sara and I talked about, a failed break of the prior week low, potentially leading to a bullish engulfing candle, which did happen on QQQ and QNES, and SPY fell just a little bit short, but you ended up with a 2-week balance. Well, last week, 2-week balance break to the upside, gapped out of that balance big time. You can see a beautiful back test on NQ, both during ETH, like never even on a cash hours basis. If you flip over to regular trading hours only, you still get a gap there. So ETH gapped out of that. So value for last week gapped higher relative to the entire prior 2-week balance. There's nothing bearish about that. How can it change? Certainly taking out a prior week's low. And really that, to me, for anything meaningful to occur, we would need to knife below last week's low and then come all the way back down. And then I'd be like, okay, that's neutral on intermediate timeframes. So we're pretty far from that happening, right? Now, how could short timeframes change again? Because obviously that's how this started, right? The downtrend towards the prior week's low started with a 30-minute downtrend. And that's breaking a multi-day balance to the downside. We don't even have a daily balance right now. Dailies is framing higher, weekly's framing higher, monthly framing higher. Everything is pointing up. It obviously always is at a top, right? There's never a top, but a major local high. It always looks that way, and so it's got to end, somehow. So whether that's this week or not, there's no reason to make that assumption. As we've said, as long as it remains constructive, we focus on leaning on buying dips, right? And shorts are very much rentals. Now, as far as this week, like your first warning side, this was a very nice, clean, and bullish double distribution profile to the upside. Consolidation here, rip higher, consolidation in sort of a new home. And so as long as, we sustain on NQ, I would say 242 to 269 is the weekly level I used last week. Friday's low was 270, close enough, right? So as long as NQ is sustaining above this 242 to 269, there's clarity in its strength. It's never quite that simple, right? A lot of times we get, some kind of a trap situation first, as we've seen a number of weeks. But there is clarity and strength above 242 to 269 for me, and that'll be the case if we lose it and then reclaim it. So we'll come back to that in just a minute. In theory, below, I'll zoom in a little bit. In theory, below 30,110 to 129, we could see some weakness. Now, if that is truly flipped to resistance, okay, and we're seeing lower highs, lower lows below this 110 to 129, then I think we can come back down to 848 to 869, which really, again, if you look on a cash hours basis, I mean, we didn't even really touch it outside of the Monday low, which was right at the open, right? But I went ahead and stuck with the same weekly level I was using last week. Now, in the first pass, down below this 110 to 129, I've said this a few weeks, like I'm not looking to be short. I think it's very, very likely that you find a reactive bid somewhere in here that could potentially reclaim the 110 to 129 and 242 to 269. And even if it doesn't even get there, this area between 242 to 269 down to 110 to 129 should be controlled by buyers. I feel a little bit more confident that it will on NQ than I do on ES. So really all week, I'm going to be looking for any kind of a failed push through 242 to 269. Call it a quick look below and fail. That's a long back up to 448 to 469 and probably last week's high. And then again, you could, what I wouldn't call a look below and fail, but if we do trade lower and then later reclaim 242 to 269, that's when bears are probably going to be punished. Now, if we do firmly offer this 110 to 129 and find the rotation down to 848 to 869, even come down to last week's low on NQ. Keep in mind, again, we did not even really backtest the prior week's high, the prior 2 weeks high on a cash hour basis. It was just an ETH test. So could we come down, punch through these ETH lows, and then just reclaim 848 to 869 and rip back to 110 to 129? Yeah, I could see that. And it could be another situation where we've got another failed break of a prior week's low. So until or unless we're making like meaningful traction below last week's low, ETH low, 711 to 730, so 29,711 to 29,730, nothing bearish meaningfully is happening. Obviously, we would be in a downtrend if we saw that, some kind of a shorter time frame downtrend. You could be short for that downtrend, but it doesn't necessarily mean that we're heading to the 1932 lows or anything like that, right? You're going to have to break a multi-week balance to the downside. So, yeah, I mean, if we trade lower first, I think it's more likely that the dip just gets bought, even if we crack some of these levels. The flip side of that is if we do get some kind of a failed break of last week's high and then start coming back through range, maybe that can be a little bit more bearish, right? It's been a long time since we've seen a bearish setup yield any kind of meaningful bearish results. But if it's going to, that's the way to do it, right? If we trade lower first, Sara mentioned opening the month red. Here's their chance, and it would be the same thing, right? Tomorrow, let's say we pop this high and then come back down. There's more of a shot, right? You get some kind of a failure from buyers. Maybe it then recruits some sellers that are like, you know what? Yeah, let's sell this thing and do some technical damage. So to me, it's more bearish if we trade higher first, and like still not bearish, but like more bearish. If we get some kind of a failure higher first, and then we start cracking these levels, maybe buyers are a little bit more reserved. If we trade lower first, they're going to buy it. So that's where I'm at with NQ. And I'll flip over to ES, which is pretty much the same idea. It kind of flirted and like dry humped its breakout level for 2 days last week before it finally went off. So it's a little bit more sluggish, but I feel like what you saw is obviously SMH has been very, very strong, right? Semis, memory, all that kind of stuff has been very, very strong. And finally, we started to see a little bit of rotation at the end of the week, right? You saw the software rotation, which I think a lot of people were expecting for that to come. And so what you saw is that at times you would have some momentary weakness in NQ as some of that rotation took place. Some of the money comes out of the big names, but it wasn't lasting, right? Because no technical damage was done. But because of that, I think it gave an opportunity for just some other names outside of semis to find some love. ES found that strength. We had that big rip on Thursday, which was due to the same recycled news we've seen 69,420 times in the past 2 months. But it's the same basic profile, double distribution to the upside. We've got this upper distribution here. I think bulls are broadly okay above, and there is clarity and strength above 69 to 72. It's a little bit further below Friday's low than for NQ, but I still think it's fine, right? So that could produce some kind of a look below and failed day. But you're strong up here, right? And then same type of thing, I believe, below 49 to 52. Again, like firmly below there, like really offering it. You could see some weakness basically back to last week's low. So last week's low was a little bit closer, in reach, I would say, on ES than it is for NQ. But NQ can catch up real fast. And then I would also add, the area sort of in between. I feel a little bit less confident on ES that buyers will control this area like they should. Still will be watching for some kind of a failed push below 69 to 72, which reclaims. That's going to be a long, basically back up to Friday's high. But again, a little bit less comfort or confidence that buyers will control sort of the in-between no man's land on ES. But, 49 to 52 holds, reclaims 69 to 72. It's go time. And then the same thing, if we get some kind of a push below last week's low, that fails and we come back in range above 15 to 19, it's coming back to 49 to 52. And then again, if we fail higher first, then maybe there's more of a chance that sellers can defend some kind of a lower high. But to me, if we trade lower first, the dip gets bought, sellers get run over, and it was just a pullback to buy most likely. So again, a little bit more bearish to pop these highs, especially on ES, and then start cracking these levels to the downside. But yeah, if we trade below last week's low and then we reclaim 75, 69 to 72, it's engulfing. And then the same idea on NQ with the same level. So we're really not that close. Show me some kind of clean acceptance back below last week's low, reject this entire move here, which is kind of a lot to reject. Something would need to change, which it can very quickly, obviously, in this market, and then find some traction back into that 2-week prior balance. So we're very, very far away from high time frames flipping. Sarah mentioned the monthly chart, not even close. And we're kind of far away from intermediate time frames flipping bearish. It's really just, do we flip short time frames? And sure, you can trade both sides, but to me, I think you have to operate under the assumption that you would be seeking some kind of a daily higher low to resume higher until you get that sort of intermediate time frame technical damage. So as boring as it is, the bias is appropriate to be long until you see some kind of a damage. And again, losing this sort of LVN between the two distributions would be like your first warning sign. But I would still, again, not get too comfortable on the short side on a first pass below this 49 to 52 on ES and what I say, 110 to 129 on NQ. But persistent weakness below there, maybe something has changed.
Yeah. When I think about the different scenarios, I think there is a low probability, very left tail event that the war and missiles flying resumes. I don't think the markets are prepared for that at all. And if it were to happen, we would have, a violent move to the downside. You can hedge for that, as I mentioned earlier, given levels of volatility, but I don't really think anybody is particularly concerned about that at this point. And you're right. I think if we got that, folks would eventually just view that as a reason to buy, because eventually the war would be over again. So I view that as kind of a lower probability event. I think that the general case is that we just kind of have status quo. It's back and forth, negotiation, ships are moving, but not that many. We're in a ceasefire. It's not really such a big deal. And in that environment, we just continue to grind higher with the NASDAQ leading, because the secular growth names are impervious to the higher energy regime, the higher rates regime. And so we continue to get money flowing into things that have been working and probably out of things that haven't been working. I think the more dangerous or interesting thing that could lead to this reversal pattern, is, as you are pointing out, is if we actually get a deal, we gap higher on a deal, but then we start to see the rotation, right? Because then we start to see less reason to own the AI CapEx story, rotating into value cyclicals, out of the dollar names, out of the energy, back into energy importers like Japan and Europe, back into housing, back into things that benefit from lower yields. That could be something where you have a dynamic of the money flowing out of the tech names. And when you add on all the zero data expiry stuff and the leverage ETF stuff and the forced selling that could happen, that could be an environment where we actually, we would need to see that NASDAQ kind of gap higher and then crap out. So definitely keeping an eye on that, particularly given where the call premiums are and positioning is and how long everybody is, NASDAQ related names right now. It almost seems like, to some degree, the end of the war and a firm this is over type dynamic is what's going to take to see a reversal of those flows, at least temporarily, that have only been going into or mostly going into the AI CapEx names. So interesting to tell, see how this week plays out. Just another quick look here. I know the data, we've been working on that. We're back up and running now. Thanks for everyone's patience dealing with the Sunday night blues as we moved into the month of June here, but we're fine now. S&Ps are flat, so you've missed nothing. Up one handle to 75.97, NASDAQ up 32 to 34.37. Russell down 3 basis points. Bonds a touch weaker. Let's shift gears now, Sara. Let's move over to crude. Definitely want to get your perspective here as you're thinking about the oil market to start the week. Oil had a pretty nasty fall last week. It's been pretty weak now for the last several weeks as the bullishness about an eventual deal become top of mind. But we'll see, right? And nothing is done until everything is done. And so, to start the week here and to start the new month, oil up 2.5% to front month 89.42. How are you thinking about the setup here for the crude market as we move into June?
Okay, so here is the daily chart, and I've been talking about how we've been stuck in this. If you see this box, this is kind of the range that we're stuck in. And if you go to a higher time frame, like the monthly, you're going to see that, what is this month? April was an inside month. May was a second inside month. So it's really just tightening up, and it's not really going anywhere at the moment. We got our big move, I guess, in March, and it's just tightening up. There is... Only thing I can see is they did take some stops last week. They took out these guys, so they made a lower low here. So maybe you'll get a little internal broadening formation and come back up and test that. But we would have to get above last week's highs, which is 94.70. And I really don't have too much confidence in that. either, since we are in this really tightening range. And until we can get out of that range, I'm not too hip to trade oil. Yeah, I don't know. And I'm surprised oil hasn't fallen apart more with how bullish the market's been and, all the news in Iran and all that. Yeah, I'm just surprised it's not lower, but it isn't. And it's just, trading sideways for now.
Yeah.
So not too much interest in it from me. Not a lot of clarity for me either. So
Pax,
Oh,
any
well.
key levels for crude? I have noticed that, the chart of kind of front month crude looks pretty poor, as Sara mentioned, but December crude chart actually looks a lot more constructive and seems like the idea that higher for longer in the energy market is going to be there for a while, and that's part of the bond story as well. While we're seeing, yields remaining closer to the highs than not, but how are you thinking about crude here?
If you're looking at the July contract, July made a low. Well, the front month crude made a low last week of 86.35, I think. And if you're looking at the July contract, that's like a triple bottom. If you've got your continuation settings up, then it's really nothing except for last week's low. But looking at the July contract, I think is if 86.35, 86.15 to 86.35 holds, then it would be a buy down there with a tight stop. But we're heading into summer. We're heading into the summer driving season. Crude's always rolling over, so you got to keep that in mind. And crude is just gonna, it's I'm bullish crude. If 86.35 holds, then I'm looking to. I hate talking about being a dip buyer, but I'm looking to buy those. I'm looking to buy those breaks with a tight stop underneath it. I'll look for the opening range tomorrow, the RTH opening range at 9:00 Eastern, 8:00 Central, as something that I'd like to look at, and maybe trade a breakout of. But I would assume that for a while we're going to be a little bit sideways to strong. I don't know that we're going to have a terrible downside break unless there's like a real peace plan signed, a real MOU that's actually signed, and then of course that can change things. But still, this is all sort of a sideways to bullish tape. Just be careful. We've also had a lot of great tradable volatility in crude. So the market's bound to kind of slow down and get back into more cyclical stuff as long as there's status quo in the world. So who knows what's going to go on?
Yeah, listening to Shai, him, what she has to say, and then I know there were some comments from, I think it was the Exxon or maybe it was the Chevron CEO about just how we are getting to a critical point here, right? If in the next, many fundamental and physical players have kind of targeted middle of June as a really important point in the calendar, just given how much inventory we've drawn down, how much more can we actually draw down before we start getting to tank bottoms in certain areas, and the idea that eventually you're going to see physical players really step back in because they are concerned that the strait's going to be closed for longer. I was looking at the poly market or Kalshi odds about when's the strait going to be opened, and the odds of it opening by June 30th, the odds have now been cut in half since where they were last week. We're up above 60%, now trading I think between 30 and 40%. So a decent drop in expectations for the strait being open at the end of June. So physical players are starting to get a little bit more antsy and kind of believing that the market will move higher. Clearly, the president doesn't want that, and he gets a big say at what happens there. So we'll see. But Pharm, any insights or any key levels you're watching here for crude, and any implications for how you're thinking about trading it or other asset classes based on it?
If you recall, a number of weeks ago, when asked about gold, actually, and I said I would rather look at my mother-in-law in her nightgown than look at gold, and gold did absolutely nothing for many, many weeks. I'm actually now interested in gold, but I feel the same way now about crude. So I haven't even bothered to update my levels. I do have my chart up if they want to flip it over to me. The levels seem like they've been fine. It's just a choppy, sloppy mess, though. If you kind of zoom way out, it's kind of all stuck inside still. I think I said that a while ago, stuck inside a good high and a good low, right? So we're going absolutely nowhere. I think, like Sara said, I really don't have a whole lot of interest. It has been a great trading vehicle for like day trades, so maybe I would look at it from a day trade perspective, but generally a nice balanced week for the most part. Being back, sandwiched in between these two spots, you could probably find some reasonable rotations there. Like maybe, I don't know. I said way back in the day that when it got back over 91.69 to 93.07, I think it was more war, right? But if it lost it, then the war was over type thing. It seems like that's playing out. So, if we reclaim this 91.69 to 93.07 push through last week's high, then, maybe it means more war. But like, I'm not updating my levels on this. I don't want to trade it at all. So just not super interested in that choppy, sloppy mess. But I am interested in gold, which we'll see when we get there in a minute.
Yeah, and also definitely not interested in seeing your mother-in-law in her pajamas. But let's shift over to gold then. Sara, what's your take here on precious metals? We were all on the record a few weeks ago looking to trade gold from the long side, and that didn't pan out well for any of us. But we all kind of flipped, and gold's missing the narrative here. It seems, and it's certainly been a lot weaker, and it does look pretty nasty again. And trading week again this evening, 45.63 last, down 65 basis points. How are you thinking about it here?
Well, we're kind of in a similar boat, like with oil. Back in March, we had this big outside month, and so far we've traded 60 days inside of that. So we're also kind of just trading sideways. You'll notice last month they tried to go inside month and down, and we're not able to do it. So just again, chopping around in here. But since the bears failed to take it down, if the bulls would like a shot, I mean, it would be their turn because the bears didn't do anything. So we potentially have a weekly setup to the long side. So above last week's highs. If you can get above last week's highs and stay above it, you can target last month's highs, which is 47.83. But yeah, we've got to get above that first. If we look at the daily, nothing too great here. Yeah, still kind of, you do have this little bitty baby running formation that's been playing out, I guess, this week, sort of like this. I would prefer to see them expand up and get up in here, but that will be determined if we can get above last week's highs or not. If they break below Friday's lows, they'd be trying to come back down here. So kind of all dependent, below this level, 45.19, they'd be trying to go back to the lows. Above it, they'd be trying to go up here. So right now we're just an inside day, so there's really nothing to do here in this moment right now. So
anything on silver? I would have thought, just kind of thinking fundamentally, given the strength in NASDAQ, given the strength in the semis trade, would on the margin more for a fundamental case for silver over gold. Does the chart line up with that narrative at all?
So chart wise, silver would be stronger.
Yeah.
And the reason I say that is because last month in May, gold took out April's lows. And if you look at silver, last month in May, we took out April's highs, not the lows. So by that simple logic alone, silver is stronger as it hasn't taken out a previous month's low. So if we do get some movement, maybe silver will take off more because it is a little stronger. Like I said, it didn't take out a previous month's low. Still, it is pretty sideways. Just kind of like gold, it's sideways but slightly stronger is kind of how I would describe this chart compared to the gold chart.
Yeah. I mean, the one that's is most directly impacted is probably copper, and no surprise, like the copper chart looks better than the gold and the silver chart. So there is I like to see that fundamental narrative idea kind of match up with the technicals, right? So on a relative basis, copper outperforming silver, which is outperforming gold, kind of meshes with this idea that the money flow is going into the semi trade, into the AI trade, and that there's some consistency there. I think we'd look for, a divergence or a breakdown in that trading, maybe to give a signal to if and when the Nasdaq may turn. So we'll keep an eye on the copper market throughout the course of the week. But Pax, any key levels here for you on gold or silver?
I do want to make a follow-up point there on copper. Copper is a great trade, and with the volume in copper is better than the volume in silver. So if you're, as independent traders that are capitalized well enough to be able to trade a market that has some rhyme and reason to it, that has some correlated ties to what's going on in the AI markets, then, copper is a great place to spend some time. Silver to me is very, very dangerous. Silver is, you think silver is going, it looks like silver is going. We get some strength, that kind of ran up with copper last week or the week before. And then, it just kind of falls apart and gaps down and stops you out all kinds of stuff that's good. Silver, I think, is just a lot more dangerous lately. Gold is a great trade, I think. The levels haven't changed. I've been talking about these same levels over and over and over again. It's 40. The trade is 45.91 to 44.92. That's the swing. 44.92 to, and if we get below 45.92, then you get short to the most recent low, which is I think 43.50. Let me look. I think it's like down to 43.5, 43.63. So it's I wouldn't. I would take profit at 40. That's also 43.63 is the recent low, last week's low, I think, May 28th, whenever that was. And it's also the 200-day moving average, so, close to it anyway. So pay attention to that level. So 43.63, 45.94 to 45.91. If we get above 45.91 and we close above 45.91, then we can rally back up into, the 4,700 to 4,750 area. But just trade those swings. Gold is giving it to you, and when it gives it to you, take it. If it doesn't give it to you, then wait for the next one. Copper's been a very, very good back and forth intraday trade, and silver, I think, is just kind of dangerous. Dangerous on the dance floor. Silver was a major part of my year last year going into the beginning of this year. We talked about that silver trade above the Hunt Brothers high over and over and over again on here. $50.36, the high from 1980, 1981. Which was also a double top going back to 2011. And then once we got above that, we had equidistant swings up to, the wild, wild west up to 119. Since, or 113 is where I covered. But, since then, it has just been very, very difficult, very difficult. So be careful. If you guys are trading prop money and you want to continue to practice your resets and buying new accounts, then keep trading silver. If you want to make some money, I would take a look at gold.
Pharm, you mentioned, maybe getting constructive on gold here. What are you seeing here? What's the time frame? How are you thinking about it?
Yeah, I was looking at that weekly candle. As Sara mentioned, that the safe trade is looking for a break of last week's high, a break that sustains of last week's high. I did add one spot to my chart. If they want to pull up my chart so we can look at it, I've got one spot that I'm interested in buying anyways on gold, which is basically 44.69.4 to 44.83.3. What is this? I don't know. Somebody put that there. I didn't put that there. They must think my name is Putty. I don't know.
I don't see Putty, my boy.
Fully.
I don't know. Whatever. I don't know what that is. Somebody's playing with my charts again. It must have been my youngest. He's kind of, he likes to mess with my charts. But this would be the spot from where I would try to front run a break of last week's high if we get some early weakness. I see this as potentially being very strong. Single prints from Thursday, which like everything had a set of singles, it seems like, through there. You can see, you can already see it ahead of time. I'm not a pattern trader, but you could see that the head and shoulders traders would be salivating over this. The inverse head and shoulders traders would just love it. But I see this as a big spot that I would definitely look at potentially buying the 44.69-ish area. Any kind of a failed push through there. I'm not going to just bid it directly, but this holds, triggers a reversal, or we get a failed push through there. And find a reversal, I may look to swing some gold calls or something like that. But for sure, the safer play smarter play is a sustained break of last week's high. I do see some risks of a failed break of last week's high, just given how thin the trailing 2 weeks ago was. You could find some resistance there. So because of that, I'd rather define risk in a tight manner with some kind of shorter time frame entry, if given the opportunity. Right, you're always looking at the session and what it's offering you. But if it gives me an opportunity and an excuse to get long in this area, then I will do so, and I'll see what it can do. I'll take some profit off, certainly sometime before we get to last week's high for sure. Maybe at last week's volume point of control if we ended up coming back down there and all the way back up. And then I'll see what my runners can do. But I do have some interest in that spot. It came down to this 43.92, 43.98, which was like, I don't know, I guess it was 4 weeks ago when I last updated the gold chart for the show. Big spot. Would like to buy that. I was off, like Sarah, I was off out of town last week. So just looked at it for the first time about 30 minutes before we got on the show. And that's the spot that I'd be looking to buy. And if I don't buy it, then, my youngest is going to give me a hard time. Putty. Silly putty. That's what it is.
Silly goose.
Yeah.
Yeah. I mean, I think gold's in search of a narrative. I think gold likes it better when interest rates are falling, when oil's falling, when central banks are easing. And that's not the environment we are in right now. It's kind of remained negatively correlated with crude lately. And so when crude's moving higher, gold's typically been moving lower. We've seen a decent move down in bond yields from the 30-year down from 5.20 to back below 5%. And gold had a little bit of a wiggle move higher off of some pretty nasty levels, kind of commensurate. That kind of makes sense. But, if we're going to be mired in the continued geopolitical issues and central banks or foreigners are selling gold to pay up to, buy energy, then it's a tough ask there for gold. So we'll see. Pax, I'm curious. We had been mentioning the bonds in prior weeks. No mention really yet. 2 weeks ago, 30-year yields really had a big push higher on back of some of the inflation stuff and the supply and some auctions that were not great. 30-year yields topped out very close to 5.1985%. We're back below 5% now at 4.97. Any big levels in bonds that you're looking at here? Because clearly the bond weakness is something that is needed to get equities to be weak, it seems. So curious if you're seeing any signals there.
Well, it's not. I wouldn't be long bonds. I wouldn't be long the long bond. I like the high. I like Friday's high. I better look. 112.28, I think. 30-year needs to get above 113.02 in order for it to get strong. So, in order for it to be a little bit more than just a short cover rally or, just a little bit of a reaction to strengthen the indices. So, I still like trading the 30-year from the short side. I have not made it a secret that I'm bearish long term. Bonds, I'm not, I'll let you guys talk about Warsh and his desires and what President Trump wants, and but the market seems to have different ideas, and every time it tries to get back up to that 113.02 area, it seems to fall apart. So let's see. I mean, it's a good spot for it to stop. If we get above 113.02, 03, then I want to see 115. Back to the yearly opening range, 115. Like 115.08. And then above 115.08, then we can really go up to like 117, 118. But we're a long way away from any of that. So if 112.28 holds, last week's high holds, and we do not get above that 113.02 area, then I'm looking to sell rallies in the 30-year bond until we take out that level. That's it.
Yep.
And I think you're right. I think that sort of what you were talking about with crude. You've got the producers starting to talk about, Exxon talking about longer term, higher for longer prices, and the curve in crude. That's going to drag on the indices. That is going to drag on bonds. That's should be a boon. I don't know what that's going to do for gold. I love Tracy's supposition that gold is selling off in reaction to central banks and to countries selling off some of their gold reserves in order to finance higher energy rates. So, I don't know what goes on, but I'll tell you that late in the year, it sure looks like inflation is going to start to rear its ugly head, and the S&P is going to have a difficult time continue rallying, especially with long-term bond weakness.
Yeah.
What do I know?
You know a lot. You know a lot.
I know how to survive. I know how to survive. And how to
you know
make
how to
money
keep your
and how to
seat.
keep it.
You know how to keep your seat.
I know how to keep my money, right?
Yeah. Just a last look at the tape here before we transition over to the crypto closeout at the top of the hour with Trader Mayne and Follis this evening. But we're making about to closely to the highs of the session here with the ES up about 6.25 points, back through 7,600 to 7,602. The NASDAQ 3466 up 20 basis points. The Russell now up 10 basis points to 29.27. Oil still holding in there strong, up 2.35% to 89.39. Gold, a little bit of a rally off the worst levels, 45.67, down 57 basis points. The bonds a touch weaker. The dollar not really doing much. And then the Bitcoin, Bitcoin is down for the weekend, or flattish for the weekend, up 30 basis points now from where we were at 5 p.m. But Sara, I'll close it out on you with the Bitcoin here.
That makes me laugh every time you say that.
Bitcoin.
Jimmy calls it the Bitcoin. Now he's got me calling it the Bitcoin. I'm curious here. It's really, for a while there, it looked like it was generating some positive momentum, kind of running commensurate with the equity strength, and then kind of just petered out towards the end of last week. What are you seeing here on the chart?
Well, it's kind of really technical what happened. I remember a couple weeks ago, I was talking about the weekly chart and how we had gone up for like 6 weeks in a row. And like we're always talking about, we can't go lower until you break a previous week's low. And then that's just what happened. Looks like 3 weeks ago now. We broke a previous week's low, stayed below it, and they're trying to come down. You're closing this month with a shooter type candle. And I've been talking about this 49 level for a long time, and it looks like if we can break below last month's low this month, well, in June, tomorrow, or I guess this candle rolls over in an hour. So we're going to get a new monthly candle on the Bitcoin in an hour. So if we can break below last month's low and stay below them, we can start to see these lows get taken out, and I think it would trigger, well, I know it would trigger a lot of stops, because if anybody's tried to buy the dip since February and we go below, they're going to have to stop out. So that could speed price up down to that 49,000 level. And I wanted to mention, Pharm and I are trading the NinjaTrader Arena Cup on Tuesday. So you guys should join in for that. We're with some other awesome traders too. So join us Tuesday.
The Ninja Cup, Arena Cup qualifiers, round 3 on Tuesday. Yeah. I know we've also mentioned in the chat, we're doing another live meetup in London later on this month. So make sure you check the chat for details there. Anthony's going to be running the show over in London. I think it's on June 18th. So a lot to look forward to this month. A lot of macro data this week, as I mentioned earlier, big labor data all week this week with the ADP and then the non-farm payrolls on Friday with the ISM tomorrow, first day of the month. Expect those new flows to come in to the market as they do every first of the month with the 401k inflows. And so a lot of macro this week. CPI next week, SpaceX, ton. It's going to be an active June. A lot going on here. Pharm, I'll give you the last word here, begrudgingly, knowing that where this can take us off the rails here. But any final big trades for the week, or anything you're really looking forward to as we turn into June?
Not really. No, just watch this spot here on NQ and see if it wants to roll over, or if we're going to limit up tonight. So it's going to stop here about 469. And roll over, or she's just going to keep on going. So you're going to sell them now and hold your peace.
I feel like we're going to hit all-time highs again tonight. That's where with this 4-hour candle's trying to go. It's got 3 hours to do it.
It's disgusting. I would have preferred it come down to 340s or so and take a long, but I might get interested if it fails here.
Yeah.
Yeah, we'll keep an eye. I mean, if they're looking for any insight, keep an eye on the Korean market overnight. Just, for the a look to the tech trade. Obviously, the big DRAM names there have been, something folks are watching every night now to get a sense for what's going to happen the next day in NASDAQ. Doesn't really look like the president has anything scheduled to speak yet for tomorrow. He's obviously, something to keep an eye on here. Are we going to get some sort of deal or not? Are missiles going to be resumed or not? But a lot to look forward to here. So should be interesting for sure. And that's it, guys. So good luck this week trading. Let's turn it over now to Trader Mayne and Follis for the crypto closeout. Let's get cracking.
Hello.
How we doing?
We're doing good, man. We're doing good. Guys, welcome to another episode of the Crypto Closeout brought to you by Kraken and NinjaTrader Live. Good to see you, man. I don't think we've done one together. We've had you on as a guest with Ponzi, but this is our first time co-hosting.
Exactly. Yeah. No, you had me on the very first one, and I kind of set the bar for the rest of the guests. But no, since then, I haven't had the pleasure of hosting with you. So, let's give it a whirl. How about that?
This should be fun, man. It's actually crazy kind of how far we go back. Like if you go look at some of our interviews and stuff, like it's been some time. It's very weird, like this whole meeting people on the internet thing and through Twitter and social media, and then you see each other at an event and host some content with each other. It's like, dude, it's been like 5+ years at this point.
It's been a while, yeah, man. And I can, you know the story already, but you were one of the first accounts that I kind of started watching back in the day, back in like 2021, watching your live streams, and probably actually my first introduction to price action trading. So for me personally, it's always an interesting full circle moment. But I'll try not to glaze you too much on this stream. We'll try and keep it nice.
That's the only reason I brought this up is I just needed that on my Sunday. I just need a little bit of a hype up. So when we spoke last, I want to say that we were kind of at the range high, if I'm not mistaken, around like, 80. Basically, this would have been, I don't know, I want to say early or late April. And then we kind of got one more drive up, which is something that I think both in you, I, and Ponzi all were kind of like, okay, maybe this is just like the last consolidation. One more drive up and then back to the lows. And this thing's kind of lingered a little bit longer, I think, than I was expecting. I thought, maybe end of April there, we kind of had that range high sweep. We got back below, but we got one more push up. Now, whether this move's legit or this is everything is ripping and Bitcoin's just limping along a little bit longer, we're now, kind of back below 75K, firmly back within that old range. What are you thinking here? Like, is this just a, this kind of mid-April to, a couple weeks ago, is that just a big deviation for you above 75K and we're going down from here? Or what do you think?
Yeah, I mean, the first thing I'm going to say is like, I always say that I'm not a predictive trader. I'm a reactive trader. I just go by what the charts are telling me. I try not to get to buy too much into this thing like, oh, perma bear, perma bull. Like, is he in this camp? Is he in that camp? I'm very much one of those guys. It's strong opinions, loosely held. Whatever the markets are telling me, that's the chart that I try and trade. And for now, like I haven't seen enough to tell me that kind of this bearish downtrend that we've been in since October has broken, right? Does that mean that I'm giga bearish on BTC and expecting 20K next quarter? No, it doesn't. It means that I'm playing the hands that I've been dealt, and I'm just looking for potential bearish continuation. I'm looking for signs of exhaustion for any upside moves. I'm looking for signs of structure breaking to any bullish uptrends we're in. We kind of saw that back at the kind of, let's say, like the start of the month. I don't know if I'm able to share my my chart here. I think that
if not, I'm on the daily chart here.
That's totally fine. Yeah. We might be able to do it slightly later. But yeah, I remember like the start of May, kind of seeing these signs of exhaustion, these signs of potential distribution at the highs. And I was just saying to the guys, you don't need to go 100x max port short here if you're bearish. What it does mean is it just, maybe take some off the table if you caught the move up from the lows. Maybe be a little bit more cautious when it comes to top blasting, firing in top stop longs into the market as we trade against resistance. And so far, we've actually had the exact pullback that I was hoping for, which is basically this channel. It's you can see it clear as day on your chart if you draw a channel from like the first low back in February all the way up to the high that we've had now. You can kind of just see it's been pretty much textbook channel bound price action, bouncing up and down, channel high, channel low. And I think now we're at a spot where we could see a bounce because we're at this channel low. Exactly. We're at this channel low support. This is actually the point at which I'm kind of saying to guys, right, if you've caught a nice move down, if you've been short from like 80K, this is maybe where you take some off the table and maybe reassess as we enter the new month.
Yeah, it's quite interesting. I've been tracking things pretty slow, to be honest with you. Not a ton of trades on Bitcoin. I think there's been a lot of opportunities elsewhere, but this has been, from what I view, a very kind of orderly, just counter trend rally. I don't see, to your point, any sign here that this is anything but just a lower high in the making. And it's always a question of, when you have that down leg, and you're expecting another down, like how high does the bounce go? Like that's really the game. It's like we're expecting a lower high. Is it from here or is it from here? And there's a variety of different, things you can use to measure it. You can use, fibs. You can use all sorts of things, but really it just comes down to structure. And I agree with you. We've kind of gotten this breakdown now of this little mini daily uptrend here. And I wouldn't be surprised kind of to see something like this, maybe. Like if we get another push above the high that we made, earlier this month, I'm open to it. But gun to my head, I think, this rally, which I agree we're kind of due for, we're into some demand here. We're also sitting right on last year's low, along with that channel demand that you've talked about. We got a nice little daily sweep here, and equities are flying. There's a lot of stuff that I think is positive for a potential little relief rally here. And I think a lot of people are very bearish on Bitcoin now that it's broken down, which is kind of typical, right? A lot of people were getting quite loud up here. Hyperliquid was at all-time highs. ZEC was ripping. Stocks are ripping. Bitcoin fell over, and now everyone's calling for the lows. I would love to see a little counter trend pop here. Just to kind of, screw over that many people. And then I ultimately think, it probably plays out something like, one of these two squiggly lines, maybe a little higher, maybe not higher at all. But we have the yearly open. I believe it's around 93K. We're not even close to there yet. And like even all the way up to there, I would think it's, probably a lower high. So that's kind of my thought process for now. It seems like we're kind of aligned, maybe a little bit of a relief rally here. We see how high that goes, and then we kind of go from there.
Yeah, exactly. I think that something that traders can get very caught up in a move when there's momentum, where you see people on the timeline posting P&L cards, celebrating the trades that they caught, the money that they made, and it's often like it's so easy, I find, to get kind of caught up in either bullish euphoria, bearish euphoria, whatever it is, and to almost like forget the plan that you have, forget your strategy, forget your rules, right? But if you've been kind of treating this, I guess I'm going to call it a channel, treating this range objectively, there have been some really, really nice trades, but a lot of them have been rotational trades, right? A lot of them have been, you look for a kind of a short, sub 10% move up, and then you get out of the trade and you look for shorts in the other direction. I think that's where a lot of let's say higher time frame guys, a lot of swing traders have been really struggling these last few months because the price action has been, quote unquote, for lack of a better word, it's been choppy. But in reality, that chop is just, it's short, lower time frame volatility that's giving you rotational plays in both directions.
Yeah, I to be honest with you, I've not to toot my own horn, I've absolutely annihilated the last 3 months. I've only taken about 10 trades, but I think I went like 8 for 10. And the key was when those opportunities presented themselves, like we had a nice long down here, I had a long like back here, a couple trades on the way, was, to your point, taking profit, realizing when the trade had run its course, and it's like, hey, I'm not looking for this to be the low to go to 100K. And I think that's a crypto problem, is a lot of people forget that this is a market that you can trade both directions, kind of direction agnostic, for lack of a better term. And that every time you long, you don't this isn't the low till new all-time highs, and every
The
time you short,
generational
this
entry.
yes, this isn't the short till zero. It's like, hey, I think that this can go up. The way I describe it on stream is I'm always looking for the next single move. I'm not worried about if we're going, like, if this is the low and we're going straight to all-time high, there's going to be a lot of evidence that makes itself apparent along the way that I can get on board with that. But when I'm looking for a potential long here, I'm thinking, okay, what is the next single most likely direction for like the next weekly candle or daily candle? And if I think it might be, this, okay, can I get in a trade from here to here? That's all I really care about. That's all, get in, get out, make your money and move on. And I think that's a crypto thing. It's just like hodler mentality. Like every trade is the trade. Just like you said before, like, I'm still bearish based on these reasons. A lot of people are going to view that as like, okay, well, he thinks crypto's dead and Bitcoin's worthless. It's like, or I just think it might go lower here. A lot of people have a hard time kind of, bifurcating those ideas.
For sure. Yeah. And again, like, I think we're in the same camp here. Just because I think that we see potentially lower prices this year doesn't mean I'm not giga bullish on the space long term and hoping for, tremendous upside maybe in Q4 or even next year. I'm just going to share my screen here and kind of show you the channel that I was looking at. If that will work. Just waiting for confirmation on the back end. Oh, it's up. Okay, nice. So yeah, if you can see here, like this is the channel that price has been in basically since February, right? Where we've kind of had we had this low that was set back at the start of February when we had that move down from January. And since then, price has been really like sticking to this channel. And it's something that I speak about all the time, channel bound price action or range bound price action is very rules based, right? It gives you some clean setups. It gives you very obvious invalidations on where your trade is right or wrong. But guys have a tough time trading them because they see the move down from channel high to channel low and they go, okay, well, that's bearish and it's going to continue down forever, right? Or they see the move up and they go, okay, well, that's bullish and it's going to continue up forever. When the real money is to be made in these kind of intra-channel or intra-range rotations, right? Where you're just trying to play smart, get in, get out, make your money, catch the move from resistance to support or from support to resistance and move on to the next setup, right? And that can be really tough for some traders to kind of get their head around. And I think you really hit the nail on the head there when you said that it's a crypto problem because guys just get it in their heads that they want the 10x, they want the 50x, they want the big explosive move either to the upside or to the downside, and that means they sometimes leave the smaller moves on the table, right? So totally. Go on.
No, I was gonna say if they want those types of moves, they're longing the wrong asset. They should be longing hyperliquid.
Yeah, well, that's the one I want to talk about on this stream. Hopefully, last point I'll just make is when I kind of spoke about this distribution that we had seen at the highs here. This to me was textbook distributive PA. When we saw this, price was kind of trading into resistance here at channel high. We had just tagged this major inefficiency left from the move down. We had just entered, I'm sure you'll love this, we had just entered the premium of the price leg from that whole move down, the 0.5. I know that's something that you look at a lot. And we had just we were failing to get back above this daily EMA 200. And at that point, you need to look at the price action that BTC is putting in on the low time frame, right? And something I always tell my guys is when you see like exactly what Hyperliquid is doing now, right? When you see price kind of like cool off after it's been trending and it does this type of price action where it's like the bulls are just raring to go again and you can see that they're just getting into position, getting ready for the next leg up, right? Every low is just getting bought back up. There's no seller control, right? Even though they might have temporary stalled price. That to me is like, that's accumulation. That's getting ready for the next leg up. That's getting ready for higher prices. Conversely, when you see this type of price action, which is the exact type of price action we see a high and then it's kind of like price starts breaking structure and there's no newer highs following. And price is even like, if you draw a low time frame range, it's kind of losing that range. Sellers are stepping in, getting more and more interested, gaining more and more control over the chart. That to me is textbook distribution. And that's exactly what we saw here at 80K at the start of May. Yeah,
it's one of the easiest kind of just like checklist items you can have when you're looking for, is this a breakout or is this a good time to buy, good time to sell? Is that fib, that premium discount area? Are we in the equilibrium? It seems really simple, to me, whether there's a level of like esotericism about this, like if you want to get into like what are the Fibonacci ratios, they're everywhere, they're in your DNA, so therefore I'm going to sell at the 618. It's like, sure. But at the end of the day, I do think like just from a psychological perspective, it's a deep enough of a pullback to start convincing you that, oh, maybe this time's different. Like maybe this rally is really going to go, and you completely lose sight of like, okay, well, we have this massive down leg before, and we've just retraced 60, 70% of it. This is actually the most optimal time to sell. But people get caught up. It's like, well, maybe it's starting to look good again. And I think there's a level of just kind of like trading psychology, similar to how the big round numbers work, where people see these fib levels. It's just like, okay, well, it's retraced enough, and now it's going to go up again. And it's more often than not, like if you guys want to try something on your charts, like immediately go set up your Fibonacci retracement tool and just go pull from low to highs in Bitcoin alone. And you'll see how often the lows form kind of in that pocket there and the highs form in that same pocket. But yeah, I agree. I think, short-term bounce here. Equities obviously looking very strong. I mean, broke out new all-time highs, holding above all-time highs. The S&P looks like it wants to start the week just going up vertical. Okay. I have zero thoughts on what's going on in equities. Like very, very short term. I like anytime we make a new all-time high, I just map out the all-time high level. And I'm like, as long as we hold above that, I'm going to assume it continues to go up. If it gets back below, it's a deviation. And for now, we're holding above it. But in terms of like the macro move, I look at this on like the monthly or the weekly. I literally am like, what the fuck? I don't know how to trade this. I feel like it should crash. I feel like it's all going to be over. But I'm smart enough to know that with these types of markets, you kind of just remain long and strong until you're wrong. And until we get some sort of structure break, which is not happened yet, I'm just going to assume that they keep going up, which is, potentially good for Bitcoin.
Yeah, 100%. I think are we bringing on our guest now?
Oh yeah, I wasn't even looking at the timer. Let's bring on Trader ZS1. Good friend of mine. How you doing, buddy?
I'm good, thank you. How are you guys doing?
We're doing good, man. Thanks for making the time. Love the Bitcoin. It's Bitcoin Puppet, right? That's the NFT.
Yeah. Well, I think it's worth zero now. So
I was about to ask, like, are any NFTs other than punks like held their value? I've always wanted a punk just because it's like the lore almost, and I do think genuinely they're quite cool looking, but I can't wrap my head around paying like 50 grand for a digital picture. I don't know.
I mean, depends how you look at it, right? If you like it, I mean, it's sort of cool to have.
It's priceless, right? That's what you tell yourself, right?
Yeah, as I watched it go from half a Bitcoin to zero.
Yeah, well, hey, I mean, loss carry forwards or some sort of write-off there, I'm sure. Well, dude, thank you for coming on. I know we've been chatting about the markets on Telegrams, in DMs. What's kind of your thoughts on Bitcoin right now? You and I and Follis, we all trade kind of similar. We're all price action traders. Him and I are thinking, short-term bounce, ultimately lower on Bitcoin. Where's your head at?
I do agree with you guys as well. Like, I think the key level that we have now is the 2025 low.
Yeah.
And like we're sort of sitting at it now. I don't know, you guys can see my screen, right?
Yeah, we can see it.
Okay, so this range that I have marked out is the 2024 candle. Last year we sort of wicked above it, closed below. So like the bearish momentum is there. Mm-hmm. If we look at weekly or even weekly candle, sorry. So I don't know, you can sort of see this as a deviation, right? And then price traded down, broke below, and now we're sort of sitting at the mid-range and the 2024 low. So I mean, monthly candle as well is now bearish, it's red, and we have a new month coming up. It does look like this could potentially be another lower high. So here, and then here. So I'm looking at potentially another short if we do have a little spike up. So like maybe something like this, and then coming back lower.
Kind of like 78 or whatever.
Yeah, around like 76K, 78K.
Are you
And then,
treating that move basically as like a breaker then, like that blue box?
yeah, so this is the daily candle of the monthly open, and that's what you'll see here, here, and then here.
So this is a little bit of alpha. This is something you've shared with me a few times that I still have yet to implement. Can you just explain to people very quickly kind of what the strategy is, marking out the daily candle of the monthly open?
Okay, so typically, like BTC will move around like 15% a month. And then if it's above the monthly open, you can sort of assume that the month will stay bullish, or if it's below, it should stay bearish, right?
Mm-hmm.
And then if you just mark out from like the top to the bottom, like you can sort of anticipate how far the candle will move. So from the top to, well, currently it's been minus 12.6%, but I am looking for a little bit lower to like minus 15. But the month's ending, so it doesn't look like we're going to get it. So a trade I took last week was we broke down below the monthly open. We sort of like made this bearish order block, and then I just literally ended a short, and price has sold off a little bit. And then if we look at the previous month, I do like to flick between like the 12-hour and the daily. So we was below, we've closed above, reclaimed, and then we continue pumping, and then the market structure, like short term, would have shifted. So and then if we look from the bottom of the month, so here to the month ended over here, so if we look at a 21% move up, and then above previous month's highs.
You know, it's
interesting.
I use the Monday range strategy a lot, and in like mechanistically, it's the same, right? So like people always ask me like, why is the Monday range some sort of magic strategy? I'm like, well, it's not really that special. It's just this idea that like, hey, in terms of the weekly candle, if we trade low to start the week and then reclaim Monday's low kind of early in the week, my bet is basically that the rest of the week's going to be bullish. So this is kind of the same thing, just using the monthly candle instead.
Yeah, pretty much. Just trying to play the momentum for where you think the month's going to end.
Yeah, the reason I like the Monday candle strategy is because it's quick, it's mechanical, and it happens every single week. I think crypto traders have a really hard time when you talk anything like monthly time frame. They're like, wait, I gotta wait for it to like reclaim the monthly open. Like that's gonna take weeks. And I'm like, yeah, but you might only have 3 or 4 trades, on it. Yeah. But those 3 or 4 trades give you 15, 20% moves. There's just so many different ways. Yeah.
As long as it's high probability and like you can't really complain. The wins compound pretty quickly.
Yeah, this is something that I think most traders are, at least in crypto, aren't aware of quite yet. It takes some time. Like it takes some time to realize like the real power, in my opinion, in crypto is compounding your account over time, especially if you're stacking Bitcoin over that time. That's when things can get really crazy. And most of the guys I know who have done best have just traded really well and then compounded the amount of Bitcoin they have. And then you're kind of winning twice. But yeah, that's a good strategy. And I agree looking at the monthly chart here. And I think Sara from the last section, like we've taken out April's high and we took out, and now we're well back below even April's close. So if we make a new low below May's low, it kind of looks like this thing's just going to roll all the way down to that range low that you have there.
Yeah. So we've sort of, so we have, what's this? April's range. Then we also have February's range still, which we're sort of like still trading inside.
Yeah.
So we took out the high again, like deviation. If you look at it on the sort of like this yearly candle, the weekly held above a little bit, broke down, and then potentially the same thing.
So based on that high time frame chart, how low do you think Bitcoin could go? Like I think Follis and I have been looking at that 48K low, that kind of big swing point there.
Potentially even lower,
go lower
like
than
low
that.
40s.
Yeah.
The previous cycle we retested like the yearly order block. I mean, it would be nice to see it again, but whether we get it or not, I'm not sure. But like, it's a no-brainer to just buy spot at this level, I feel.
Yeah, I think
and
anything
then
in the 40s makes, yeah, exactly as you say, it's kind of a no-brainer in terms of accumulating. If you believe in crypto long term and if you believe in Bitcoin long term, then it absolutely makes sense to start DCAing at that level. You can probably split hairs and say, well, I don't think it's gonna, I don't think it's gonna bounce there. I think it's gonna go to the low 40s but at that point, I think, yeah, no matter kind of how you slice it, it does make sense to start gaining exposure to Bitcoin at those levels.
yeah, normally we do bottom like towards like the end of the years generally,
Yeah,
like
Q4.
September, October. Yeah, so I mean, it would be nice. Like it's sort of like this price action we had over here right now in terms of taking out previous month's highs. So if we look, it's pretty similar. Like first proper push down, and then took out the monthly high, sold off. Like maybe it's the same here.
It is quite funny. Like a lot of people, like one of the most kind of well-known sayings in crypto is this time is different, but I find it to be like one of the most incorrect because it's actually almost always the same. Like every time there's an alt season, it ends the same. Meme coin super cycle, it ends the same. We're going to crazy, like never sell. It's a super cycle.
Yeah.
It ends the same. And these consolidations, this one's different. It's like actually like this, other than the fact that we made a higher high, kind of in October
Yeah.
relative to January, this top is like copy paste from last cycle's top. Other than it just had a bit more juice on that second rally, but otherwise it's played out almost verbatim.
And also in terms of timing, like the 4-year cycle was pretty much exactly spot on too.
It's quite funny, but again, we get so zoomed in. Follis and I were talking about this before. You kind of lose the forest for the trees sometimes, and you get so zoomed in on like this leg of price when we're at. Where it's like when you zoom out, it's like, okay, if this is anything like every single piece of evidence we have before, we're gonna make a lower high, and you're gonna be able to buy in Q4, and you're probably gonna be able to enjoy your life a lot more than staring at this thing and dissecting it. But speaking of some more interesting markets here, have you been in on ZEC, on Hype? On any of the crypto that's like actually moving?
I got into lit around 90 cents.
Okay.
And it's like beta to hype. I mean, it's doing a lot of volume as well. And I mean, the chart looks like it's bottom to me, right? It looks pretty good.
We have very
monthly
similar
chart,
thoughts on LIT, yeah.
Yeah, so I've been many friends have bull posted this to me. So I mean, I don't see a reason to like it looks like it's bottomed.
It genuinely feels like a huge chunk of my timeline are trading on Lighter and always talking about Lighter and always bull posting Lighter. And I couldn't understand why the price action wasn't I was wondering whether or not this was just some kind of bias that I had, that I was just surrounded by Lighter maxis. But I think now that, I mean, it's a very hard market for even good altcoins to find footing in. And I think we've seen that with decent projects that have launched over the last 12, 18, 24 months, even though they might have, these good roadmaps, these good runways, these great projects, these fantastic manifestos, docs teams, whatever it is, they still just, the chart launches and the price nukes. And I think that, hype kind of leading the market here and leading altcoins a bit is a really healthy thing for projects like LIT, for projects like ZEC, because it actually gives them a little bit of breathing room and like brings a little bit of excitement into the alt market that we haven't really had since not really since November 2024, December 2024. We just haven't had that capital inflow into the altcoin market. We haven't had the excitement. And that's one of the most exciting things about like these charts to me is like, I'm looking at LIT, I'm looking at ZEC, I'm looking at Hype, looking at Near, and I'm thinking like, well, if they can do these moves in like basically a bear market, right? Where there's no capital really rotating into altcoins, and we can see that from the BTC dominance chart. What are they going to look like when dominance gives a pullback? If we get a proper run, if we get some breathing room on alts, it's exciting.
Yeah, I mean, if the coins are strong in the bear market, you can only imagine what they're going to be like in the bull market. Because I mean, if you remember like INJ from I don't know, like a few years back. It absolutely ripped compared to everything else, and it stayed strong. And then every time the market nuked, it would bounce way harder than everything else. So
What do you
I feel like
guys
it's
think
similar.
about this new meta for altcoins? I'm calling it the is an actual business and makes money meta. So things like Hyperliquid and Lighter, like finally, like they're coins for companies that do things. Like Hyperliquid arguably is one of the most profitable companies like ever. Like when you look at it from a like I think the metric that was most interesting is like the revenue per employee. Like the numbers astonishing. They're making all this money and they're using it to buy back the token. It's like, okay, like it's a coin that has a purpose. And Lighter, to your point, is a beta of that where it's like, okay, like it makes money at least, right? Like this is an actual business. So when like someone asks you, why are you holding this coin? It's not just because the chart looks good. It's like there's something behind it, which is very rare for altcoins. We've had so many cycles where these altcoins quite literally do nothing. And even if they don't classify themselves as a meme coin, they effectively are because they don't do anything, which is kind of cool. And maybe that's part of the maturation of crypto is it's like, hey, the coins that are going to do well are ones that actually they do stuff. They make money.
That
I
was
mean,
my exact thesis when I longed Pump at like 006.
Except for that one.
Yeah. And it's
Follis,
like I'm just looking at the level that I longed it at. It's like 70% down since then. That's literally exactly the thesis I had. I was like, it's an actual company, it makes money, it has revenue, it has token buybacks, etc., etc. And
I
yeah,
did the-
then it just died.
I did the
Pump's a
exact
bit
same.
of Pump's a bit of like a weird one. It kind of reminds me of Rollbit. Like you remember Rollbit was
Yes.
very similar, where it's like, hey, Rollbit token, like Rollbit is still printing. Like they're not nearly as prevalent on the casino kind of sphere as they were, but they still have, I think, over 2 or 3% of the market cap for online betting, and like that's a lot of money because these are very big numbers, and it just didn't make sense. It's like, okay, like they're making tons of money, they're buying back the token. Why is it not going up? And I think what we learned from Hype is like not all buybacks are created equal.
I think a lot of it could just be faked volume and fake fees. So they are selling the exact same amount that they're buying back because, I mean, Robit was also buying back, like, they bought back, like, what, at least 30 or 60% of the supply.
Like
I haven't
crazy
checked in a
amount.
while, yeah. And also, I mean, maybe the same for Hype. I mean, for Pump, sorry. Like, they're buying back so much supply. They bought back, like, what, $200 million maybe?
Yeah, my
And I
thought
mean,
with Pump, I'm looking at this chart right now, and I'm like, is this thing along? But like, they
I was just
probably
thinking the same thing.
I mean, yeah,
Yeah.
it looks like a bottom, right? But
It
It
then
kinda
looks like a
does,
bottom. I
man.
it may
mean,
be
at
just a
that
bottom
point,
forever.
yeah.
A lot of these altcoins, I call it like the 3 stages of the sell-off, like the super aggressive sell-off, then the sell-off gets a little bit lighter, and then you get the sideways. And a lot of these kind of coins are now in stage 3, which is sideways. Some of them, like lighter, are now in like stage 4, which is they're actually starting to go up. Pump kind of looks a little low-key bottomed here. Like, are we gonna bear post this into the low? What I will say is like, yes, Pump is still making money. I do think part of Pump's issue is they never made that wealth event, like no airdrop. I think the community is also conditioned to not hold anything. Like this is where you went to create a coin that was going to live for a day. So like, who wants to even hold this coin if you're not willing to hold any of the coins that it creates? But now that I'm looking at it, we're all shitting on it. I'm like, is this maybe a long?
I was thinking the
I
exact
have,
same thing.
I have a few friends that have started longing lit here as well. I mean, sorry, that have been longing pump here. So maybe
I
The
mean,
thing
this is
about it
like,
is, it's like it's such a clear as day invalidation, right? If it's like if the
yeah.
coin puts in new lows, you just get out of the position. But like the potential upside is kind of crazy, and I think that that's a lot of like there's this common and it's something that you said before, Mayne, where it's like alts can go down minus 90% and they can go down minus 90% again, and you always have to bear that in mind, right? But it's like at a certain point, right, you have to ask yourself the question, like, who's left to sell, right? Who are you
Yeah.
actually who's actually like pushing price around, right? And you look at an altcoin chart that's like minus 90% from the 2021 highs, and it's just doing this like really boring accumulative PA on the very, very bottom of this like high time frame support level. And you just have to ask yourself, well, okay, is this a short or is this a long? And the answer is almost always a long, because you don't want to accept that tail risk of like an asset that can 3x overnight, right? Just to look for another 5% move to the downside. You're actually usually better off with those coins, at least looking for some signs of life, and then potentially looking to get into along with a Titan validation, looking for some nice upside.
No,
I mean, generally, it's
agree.
always the team are left to sell, right?
Yeah. I don't think we've seen the last of pump. I genuinely don't. I think that, because a lot of these coins look bottomed, right? Like you can look at like Tia. Tia looks kind of bottom. Like a lot of these coins look bottom. Now, obviously, if Bitcoin pukes, everything we're talking about this is going to be wiped from your memory. And we were not talking about longing any altcoins, of course. But that's kind of the game you play. It's like, okay, a lot of these. So the risk that you run, I guess I would say, is like a lot of these coins will look bottomed, and then it's all up to kind of Bitcoin. Like, is Bitcoin going to at least hold or potentially go up? And if Bitcoin can hold or go up, some of these alts, to your point, folks, are going to pop, a 2 or 3x out of nowhere. The problem
let me draw. Sorry, go on.
Yeah, the problem is some of these coins are going to do this, and some of them are never going to make it out of this kind of bottoming range, and it's all about selection. Like, if you look at ZEC is the exact setup we're talking about back here. Like, it ranged, it broke out, it retested, and it rallied. Some of these coins are here, like lighter. Some of these coins will never make it out of here, and that's obviously the game.
I think the distinction should be drawn between coins that like you said Tia there. So that's a good example. To me, that's a coin where I have no interest in it because it already kind of had its run. It had its moment in the sun. And any upside that it's going to face going forward, it's just going to run into a ton of bag holders and a ton of sell pressure. And also, like, it hasn't really shown me that like strong kind of move off the lows that I really want to see to make me want to get involved. Like, compare that to LIT, where it's like it's showing some signs of life. It has a really nice move off the lows here that gives me some tradable price action, and also it doesn't have that same level of selling pressure. It hasn't really had its major run yet. In fact, after the token launch, it just kind of bled out for a while until it got to sub $1, and now it's actually showing the first signs of life. This could be its first kind of major run, and that's the move that you want to trade in as much as that's possible in crypto. That's the move that you want to be a part of, rather than there's like guys in my community who are like asking me about Polkadot, and they're asking me about
Link.
Like, yeah, Chainlink is another great example. And they're like, do you think it'll have another run? I'm like, why are you even looking at these coins? Like, sure, they'll give you like, if we get an alt season, they'll probably give you like a solid 2x off the lows. But it's like, why are you trading those coins? They've already had their moves. They're already like 95% down from the 2021 highs. And any upside is just going to get hit with this massive wave of like community bag holder sell pressure. Look at, like, it's a meme, like, trade the shiny new things. But actually, yes, you should be focused on the things that have mind share, the things that have attention, because those are going to give you the volatility, the volume, the moves that you want to actually be involved in. Right?
Yeah, crypto is full of people who are experiencing mass Stockholm syndrome. I think they make money on a coin once and they just never can let it go. And it's that's why the Link Marines exist, why the XRP army exists, whatever the Polkadot people call themselves, insane, I guess would be a one word. They made money on it once, they saw it go crazy, and it's like, well, it has to go again. And it's like the reality for 9 out of 10 coins is the roller coaster of doom. Like, it is just eventually gonna, each one of these pumps could be a couple 100%. But you're looking for this, you're trying to long an asset that goes down, 90% of the time it trades in a year. You're looking for that 10% of a time to catch a 3 to 4x when there's coins that are legitimately in uptrends, or were born in a bear market. Where Bitcoin was already topped and the conditions were adversarial to coins as well, and it survived, and now we're entering a bullish regime. But that's just something that I think is very hard for people to let go of. They just have this emotional attachment. It's bag holder bias, whatever you want to call it. But yeah, there's a lot of overhead sell pressure on these coins that I don't think people realize. It's like your point was, who's left to sell? Maybe not a lot of people down here, but if this thing goes like this, there's a lot of people willing to sell, and they've been waiting now a year or two to get out any closer to where they were.
100%. Something I would love to ask ZS before he leaves. Have you been trading hype And if so, kind of what those trades look like. And let's say if you're not in position now, what is your plan for hype over the next, let's say over the next month?
Okay, I haven't been trading hype at all really. Mostly I stick to BTC. But in terms of like, I mean, it looks insane. It's literally just huge green candles up. I think you're best off like in terms of long-term play. I do think it can feel like come back towards like $40 where you would look to just buy spot. But in terms of like short term, I don't see any reason to like not just keep playing the trend on the daily. Like we have the most recent daily order block here. Let's turn this off because it hasn't updated. But yeah, I don't see like any reason to start fading the trend. Like I see a lot of guys trying to short and like pray for a top. But I mean, unless the trend tells you otherwise, just buy it, just buy the dips. I mean, we've seen it just keeps putting in higher highs, high lows.
Yeah, I drew out that monthly OB and I was like, listen, if you get to buy hype between 25 and like 50, I think you just buy it and and everyone's like, yeah, I would love to buy Bitcoin at $3,000. I'm like, I'm not saying it's going to go back down there. I'm just saying if it does, set an alert, and you'll never be ready to buy there if you didn't, think of that in advance. Similar to the yearly order block for Bitcoin, some people will think that it's impossible to get there. And then when it does, they're going to be too shook to actually take action. Whereas if you consider anything being a possibility in markets, which they are, maybe hype does get a big correction. Maybe it doesn't come to 25, but maybe it comes to 40, to your point. And you want to be ready to act there and be like, okay, don't freak out. This is actually the best coin on the market. And this is like really good high time frame support. I completely agree. Shout out to Arthur, who posted his big article. I think it was like when hype was at $25, and he's like hype to 100. And I was a critic. I was like, I'm bullish on hype. Actually was bullish on hype from like the low 20s. But I was like, a new all-time high in a bear market, I don't know if I see it. Like maybe lower high. And I mean, this thing has just proven me wrong for sure. And I completely agree. I mean, trend's your friend. Like, I don't know, $100? Like, does that even seem that crazy at this point?
No,
I don't think so.
It feels like it's almost, I hate to be the one to
Inevitable.
say, program, but it feels like it's programmed.
Yeah.
For
Inevitability.
another 40% move. I mean, it moved how much this month? Well, it moved 80% this month already.
Jesus.
I mean, it's like I was saying earlier. I mean, we're getting these moves in a bear market where capital is extremely limited, and the amount of money that's going into altcoins is extremely limited. Like the exciting thing about all these coins is like, what if we get kind of like higher prices on Bitcoin? What if Bitcoin puts in, new highs in 2027 or something like that? And there's renewed interest in the crypto market, renewed capital investment in the crypto market. We're going to see a lot of these coins do crazy multiples, right? And I'm not talking, again, I'm not talking about like every, dog shit alt under the sun. I'm not saying that we get that kind of a run, but like the coins that have been strong in this bear market, they're the ones you should be focusing on when the bull market comes around. Those are the ones you should be paying the most attention to because they're the most likely to be the actual runners the next time we get proper capital inflows.
People forget Chainlink's best run occurred after it had a phenomenal run in the bear market. So Chainlink, for early on in its life cycle, actually had a very strong bear market performance, and then it had its kind of all-time high run. And this is kind of exactly what Follis is talking about here. Is if a coin does well in the bear, I think that bodes very well for its potential performance, in the bull. So like if you go and look back. I want to say, if you look at Link BTC, you'll see that Chainlink had this massive outperformance against Bitcoin early on in its existence, and then it peaked along with Bitcoin, but its dominance against Bitcoin ended in August of 2020. So if you actually go look at where Chainlink was in August of 2020, like it wasn't anywhere near its all-time high, and neither was Bitcoin. In August of 2020, Bitcoin was coming out of a bear and then beginning its next bull run. And then Chainlink went on to have its crazy rip and then obviously never went back that high again. And I could totally see something similar for the Hyperliquid, the lighters, etc. Question for both of you. I would like to think, as I mentioned earlier, this idea of like, hey, the new meta is revenue, new meta is actual business. This idea that there's like, okay, maybe it's a flight to quality finally, because I do think the market has changed in that with something like Pump Fund, there's now just so many coins and there's only so much money, like you mentioned. Not everything is going to go up. Crypto used to be like that adage, a rising tide raises all ships. Like that used to kind of work in crypto where it's like, okay, if you longed almost anything, you made money when everything went up. Some stuff went up a lot more, but kind of everything went up. I don't think that that's the case anymore. And this last cycle was kind of proof of that. You had to be way more selective with the coins that you long. Do you think that is a trend that continues where it's like, you know what? Yeah, like we're going to see another alt season. We're going to see another Bitcoin rally, of course. Like we all agree on that. But you can't just long any alt. Like you got to be a little bit more selective with the coins you pick because not everything's going to get the juice.
Yeah, I absolutely think you do. Sorry, go on ahead, ZS.
Yeah, I was going to say I agree, and I think it only gets worse from every cycle onwards. Like we keep getting more and more dilution. Like if we look back in like 2017, 2018, there was about 100 coins you could buy. And then fast forward to now, there's like, I don't know how many thousands of coins created every single day. So
yeah, it's ticker dilution is one problem for sure. It's you have to be selective about your capital allocation. It's also like the market is becoming more and more efficient, right? And we've seen institutional adoption this cycle on a level unlike any we've seen in previous cycles. We've seen more sophisticated market participants enter the crypto market. And it's no surprise that you're seeing a lot of guys who made money in 2017, 2021 straight up say like, I can't make money in this market. And it's in a lot of ways, it's because the market is becoming, it is quite literally becoming more difficult to trade. If you don't have an edge, if you don't have a proven track record of profitability, if you don't have, in some cases, insider information, you will get left behind. And I think the old strategy of, long everything and you'll get a few runners, that's just not a goer anymore. And this cycle has shown that much.
Yeah, I think that no longer works. And that was a lot of people's whole gig is they're just like, all right, guys, long your longs. And it's like, no, actually you have to give a reason why, and you got to pick the right coin. Or you're going to get screwed. You're going to get left behind. Like that graph or that chart I was drawing earlier, a lot of these coins, even if we get a rotation higher across the board here, a lot of these coins are never going to make it out of that bottoming range. And where there's going to be coins like ZEC, et cetera, that are, doing a 2 or 3x out of that bottoming range. And I think one thing that you guys didn't mention is there's beta elsewhere now that is more accessible than ever before. You look what's happening with the AI companies, with the data center plays, the SanDisks, the Microns, the chip manufacturers. There's prediction markets now, and on Polymarket you can not only just do prediction markets and mention markets. Now they have perps, and now Hyperliquid with HIP-4 is going to have prediction markets. So there's just, and with HIP-3 you now have oil, gold, silver. You're going to have single name stock trading. On Polymarket, they just released the ability to trade pre-IPO companies, not like Hyperliquid, where it's just like, hey, what do you think SpaceX is going to go for? Based on the actual NASDAQ private market valuation data. So like, this is what we think the SpaceX IPO is at based on private market sales, like real data. So where's the interest in, dog with hat anymore? Like I can go long a company that is like building the chip that is required for, this. Like, it's just like the game has changed. And I think a lot of altcoins are going to suffer because of that. I do think the quality will rise to the top and maybe concentrate some of the money that's in crypto just into better stuff. I would love to see that, where it's like, hey, crypto's bullish. Okay, Bitcoin, Hyperliquid, et cetera. These are the coins that you want along anytime crypto's bullish. But yeah, there's just a greater asset selection, for lack of a better term, of where you can go to speculate now, like never seen before. Like right now, you can bet on pretty much anything. We could figure out Kevin Warsh. I don't think he's had his first FOMC meeting. I think that's coming up. Like, you can guess what color his tie is going to be. Like, you know what I mean? Like, isn't that more fun than being like, okay, well, if the CPI print is this, I'm going to long some altcoin.
I studied finance in London I won't even say how many years ago because I'll dox how old I am, but I remember one of my professors at the time, very smart guy called Jan Dalhusen, telling me that in the future, the derivatives markets would be everywhere, that everything would be tokenized and we would be trading derivatives contracts for every single thing in the world. I remember thinking, like, I didn't even understand it at the time, but here we are like 15 years later, and exactly what he said is coming to fruition. There is a derivative market, or there's going to be a derivative market for everything you can think of. It's effectively gambling with a shiny financial coat on, right?
Yeah, I mean, the argument is it's like I know a lot of people hate it. They're like, but I'm kind of like it is what it is. It's like trying to swim upstream or like fight AI. Like, I don't like AI. It's creepy. It's like, well, whether or not you like it, it might be the end of the world. You better learn how to use it, or you're going to be left behind. And it's like, hey, if you want to play in these markets, you're going to have to adapt and realize, like, especially if you're a crypto guy. I think there's a lot of people who are going to be this cycle's. You know how you were mentioning, like, oh, there's guys from the 2021 cycle saying they can't trade this cycle. I think the meme coin trench guys are going to struggle potentially in this next bull run, because I don't think that that's going to be nearly as attractive this next go around. Maybe that's just me being a curmudgeonly old man being like, screw you, long Bitcoin. But I do think that people have kind of seen through the facade of like, okay, these meme coins effectively were all, complete vaporware. We already knew that, but it sometimes takes people a cycle to realize that. And if you don't adapt, you're going to die, right?
Sure.
I mean, with vaporware though, like the coins go up because of attention, right?
True. We are vapor, except for hype.
Yeah. Like, things don't need to make money to go up, which is what we found.
Yeah, I just think like part of the allure of the trenches and the meme coins was like you can get rich. It was the old altcoin thing, right? It's like you can get rich quickly. Where else are you going to find a coin that can go up, something that can go up this multiple? Well, now you can find it in the stock market. Like, you could put $5,000 in a Micron a few months ago or whatever. I want to say it was, someone said $5,000 in Micron is now $4 million. I forget the time frame, but it was like a year. Like, you know what I mean? So like those types of crazy gains, crazy multiples, crazy returns are apparent and available elsewhere now.
One of the
so
charts I just want to look at is the LIT chart. This is just following on from what ZS said, and to the point that I was making earlier, where it's like, when you have this downtrending price action, right? Just bearish structure, prices just putting in lower lows, lower highs. Like, the question is, what do you need to see to get interested in this chart, right? And I think that, Mayne said it, right? You just need to see something like, some kind of upside, something to spark your interest, some kind of structural change to make you think, okay, buyers are now stepping in. This is maybe something I want to get involved at. And this chart has become interesting to me as of the last like kind of 2 weeks. We just had this downtrend. And then boom, what did we get? Structure broke, right? We had this very nice move up to break structure. And you might look at this and say, well, it already moved, like 70% off the lows, bro. Like, oh, we already missed the move. No. Not at all. Zoom out. This is the kind of chart that if it gets going, it can really get going. It can put in a 2 or 3x very, very easily. That would not be outside the realms of possibility, especially if we get some proper upside on BTC. So then I'm looking at this now and I'm thinking, where do I want to get involved? Well, to me, price is kind of doing this low time frame range here. We're just going to do maybe put in some price action like this. I want to get involved if we have a clean range breakout, right? I want to long something like that. Or potentially if we deviate the range low and do something like this, maybe that's a trade I get involved with. But for me, it's like I don't want to look for shorts here. I'm not looking for any kind of range deviation and downside, or I'm not looking for a breakdown here. I just want to play for longs, and I just want to play above this range high or below this range low. Those are the trades I'm looking for going into the new month on LIT.
Yeah, I think it's one of the better looking charts out there for sure. Just need Bitcoin to behave, right? Like, need Bitcoin to effectively not die. And if we're kind of right, I think the monthly candle It's about to close in like 6-7 minutes here.
Yeah. Another interesting chart that we spoke about earlier is ZEC, and to me, this is a very, very similar one again. Like, you have this big upside move here, and now we have this kind of range, right? And you're wondering where should you get involved. To me, it's very similar. You wait, or it's very simple. You wait for these lows to get taken out, and you get involved somewhere down here. You just wait for those lows to get taken out. Wait for that liquidity to get taken. I know, Mayne, you did a YouTube video recently on liquidity, very insightful stuff, but you wait for those lows to get taken, you wait for a structure break here, and then you get involved at one of these lows here, and you play for, potentially even new highs. Very, very interesting chart.
Yeah, I find it very helpful to think. And this is what I would say in those YouTube videos. You want to think like you are the person moving price around, the institution, the smart money, whatever it is. And whether or not you believe in some algorithm or some market maker or some, secret silent person pushing or entity moving the market, if you think about it just from like a mental model, like, okay, where does it make most sense? If I think this chart is going to go higher ultimately, and I want to fill my boots, I want to get as long as possible, where does it make most sense to long? And you look at this chart right now, the entire pullback that we're witnessing right now on ZEC, people are longing every single dip, right? Because like this is one of the best moving charts. They missed the initial move. They're chasing. So it makes perfect sense when you have that institutional mental model, that framework, that POV. Okay, if we just push this thing down below where people are comfortable, like they all are looking at those lows that you marked and say, well, this is the higher low.
Sure.
And it's always, whenever you look back in time or you get stopped out on that trade that then rips, you always kind of have that classic, like, oh man, I thought that was the higher low. It took me out precisely and then it moved. And so exactly to your diagram, like that's exactly how I trade. It's like wait for that liquidity purge and then go on the low time frame and just look for that little low time frame downtrend to become an uptrend. People are like, it can't be that easy. I'm like, it can be. It's just you won't do it. Like you won't do it in the moment because you're not looking at it from this framework. You're not zooming out and being like, actually, this is where I want to look for it to be bearish into and then flip bullish. It's all about just kind of stepping back and reframing there. And so when you draw it out in advance and you plan it, like you've discussed, it makes it a lot easier to execute, kind of in the moment. So I completely agree on ZEC there. A little bit lower. And then I think it's go time for another round.
100%. I think something you said earlier really resonated where it's like a lot of the time you'll draw these out and like price will never get to your level and it'll just send. And that's totally fine. Like it's okay to draw these plans out and for them not to happen, right? That's not what like drawing these projections out or having these plans is all about, right? You can have a plan for what to do if BTC goes to 40K and BTC might never go to 40K. It might just go to fucking 200K from here and we just get left sideline. That's totally fine. That's not why we have these plans drawn out. We have these plans drawn out for if the thing happens, then we will have a strategy in mind. We won't be like, oh my God, price has gone to our level and we don't know what to do. It's so that when price does go to our level, or if price does go to our level, we know exactly what we're doing because we made these plans months in advance that, when our emotions were low. And then when price hits those levels, when emotions are high and we're actually executing the trade, we know we can fall back on something. We can fall back on the plan that we made when our emotions were not part of the game. So that's something, again, when we draw these out, when we're looking at these levels, this isn't to say, yes, 100% likely that we're going to get this plan, that we're going to get this price action on ZEC. What we're saying is, if this happens, then I will execute.
It's sports, right? Like I always try and liken trading to sports because of the repetitions. Like how many free throws do you take in basketball in the gym, or free kicks do you take, when no one's watching? So when it's game time, you're like, okay, I've done this 10,000 times. I know exactly what to do, even though there's now a crowd and people are yelling. And the only way to kind of get that callus built up over time is by planning and then getting the repetitions in. We've got 2 minutes left here, so I want to ask you something before we go, Zed, where we've done this with every guest we've had on. All-time high prediction on Bitcoin for next cycle, bottom prediction for this kind of bear market. What are your numbers? And if you want to give us a quick reasoning why, and we will hold you to these. We're going to have a wall of shame that gets put up if you're wrong.
Okay, so I mean, we've been every cycle, like it's diminishing returns, right? As
Yeah.
price goes higher, the returns are always less. In terms of bottom, I think it's possible we see 38K, and then new all-time high, I'd say around 160 for the next cycle. And that's sort of what I'd be aiming for.
I think 160 is reasonable. Like I think 200K is a pretty big like mental hurdle because
Yeah.
like everyone was so focused on 100K. I could totally see it falling short of 200K on this next go round. But yeah, I like the 38K level. I mean, I literally just take a fib from last bear market low to all-time high, and it's like that 38 to 58 zone. I'm like, I feel like this is just where you start buying and you forget.
Yeah. I mean, from previous all-time high to the 2021 one was 250%. And then after that, we sort of went to 83%. So it's a pretty big drop.
What's 40% higher of this all-time high?
It should be
170, 180.
Yeah.
Okay, that's actually kind of depressing, low key. You know, that
I mean,
the last all-time high wasn't even 100% gain. Like I knew that, but I also haven't thought about that in a while. And it's like, yeah, like we're kind of in that stage now where this asset probably goes up into the right for a very long time, but you know, we're not going to maybe get a 5x prior all-time high anymore. But the bear markets have also had diminishing downside as well. Like it was like 87%, then it was 81 and etc. So
83.
we'll have to see. Well, we got to wrap it up, dude. Thank you so much for coming on. We really appreciate it. And yeah,
appreciate you.
Yeah, Follis, thank you for stepping in to co-host with me here. And as always, guys, this has been the Crypto Closeout. I'm Trader Mayne. This is Follis. This is presented by Kraken and NinjaTrader Live. We'll be back next Sunday. Talk to y'all then.
See you later, guys.
See you later.